Welcome to Origins, the podcast that dives deep into the business of venture capital, where we learn how the people behind the capital, both GPs and LPs, make decisions. I'm Nick Chirls, and I'm a GP at Asylum Ventures.
I'm Beezer Clarkson, your LP co-host. And Nick, I so can't wait to discuss everything Asylum. But as a quick mini intro for folks who are new to this podcast or just don't know us that well, I'm a partner at Sapphire Partners, which is the LP arm of Sapphire Ventures. And at Sapphire Partners, we invest in exceptional early stage venture capital managers, which includes both emerging managers, funds 1 through 3, as well as the more established franchise type venture firms, which are typically fund 4 or later. And we have such a treat, Nick, that you're going to talk to us about Asylum, aren't you?
That's the plan.
That's the plan. Well, you teased us, back when we had Joanna Rupp from University of Chicago on about doing this. Do you want to give us a little bit of information on Asylum? Because I'm too excited to wait any longer, and then we can chat about our upcoming guest.
Well, yeah, I broke the news a minute ago, and I guess updated my Twitter profile, Twitter handle, which I guess makes it official.
Oh, your total Twitter official. That's amazing.
Yeah. But this week, officially, we're launching a new firm with a new brand called Asylum Ventures. It's a $55 million early stage fund motivated by a mission to celebrate the creative act of building a startup.
That's just so amazing. I am so excited to see this come to life. We've been together for a long time now, us personally as friends and us as Sapphire as an LP, and we are just really big believers in who you are and what you're doing and really excited for the journey of Asylum. Can you tell us a wee bit more, or are we just going to go straight into our guest?
I'll tell you a little more. And then, I think folks know this, but deeply grateful to you and to Sapphire. It's been a long journey. You've been there since truly the beginning, and you're really a dream partner to me, and I know many other GPs, so thank you. Okay, Asylum Ventures. I'm going to give you the quick rundown, and then we'll get to our amazing guest today. In short, we want to be an alternative to the big asset managers in venture today. We've talked about the big AU firms a lot. I've started perhaps needling a bit and pejoratively calling them the new big banks. Some people like that, some people don't. That's okay. Asylum is personal for me. So I'll tell you a very quick story. You know this, and I think probably a number of listeners on the pod know this. My first job out of college was at Lehman Brothers in 2007. I half joke that my only good day there was the day it went bankrupt.
Oh my.
I had a terrible experience there. Shortly after, but around the financial crisis, I somehow stumbled on this weird, amazing, beautiful, artistic group of people and founders in the New York City startup ecosystem. It was tiny, but deeply inspiring and represented everything that Lehman Brothers didn't. And so I totally fell in love, spent the last 15 years of my life dedicated to these weird, amazing people. My partner, John, calls Asylum my 20-year revenge arc against the big banks and suits. And I think that's partly true. I'm sort of trying that on because I think it's true. Fast forward to 2021, I felt like the suits showed up in our business again. And it wasn't just the obvious big crossover funds, but it was how the whole ecosystem felt and operated. It had obviously been fully institutionalized, and we've talked a lot about that. But I felt like the whole thing had basically turned into a factory and was so far from the thing that I fell in love with in 2009, 10. So I don't think startups and founders are meant to be widgets on a factory line. I don't think there's meant to be line items in a balance sheet. I think we should treat founders like the artists that they are. They're going on a heroic journey to make something beautiful. And I think venture capital should be practiced as a craft, not like a bank.
I love it. So the visual that came to mind was I'm from the older generation. Do you remember Pink Floyd, The Wall?
Yeah.
Yeah.
Obviously.
Yeah. Obviously.
So that's my mission. It's to respect and partner with founders like they're artists. Ultimately, I hope perhaps that we might be a little bit of a thorn in the side for the big AUM firms. And that'll take time, but we're on a 10, 15, 20-year mission. And I think we're going to get there and we're going to make startups weird again. So that's my goal. It's very personal. And maybe we just do an episode on that if you're open to it.
Let's do it. Because so many questions that I think the listeners would love to hear about how one raises a fund, especially in this market, which has been a tough one for more emerging managers. And I know you're experienced, but not yet a multi-stage big bank fund, who seem to be doing a lot of but they do seem to be doing a lot of the fundraising in 2024. So hearing how you sort of counter fundraised in this market, I think would be super interesting. And I know you're an incredibly honest and transparent person, so I know we'll get lots of good thoughts.
I'm psyched to keep it real. And until then, you can check out Asylum at asylum.vc or Asylum Ventures on Twitter. Enough about me. More on that later. I am very, very excited about our guest today. Beezer and I are chatting with Jack Altman, co-founder and former CEO of the HR platform Lattice, and now a managing partner and founder of Alt Capital. Jack's a longtime friend, and he actually married a family friend of mine from growing up in Brooklyn. So really excited to have him on today.
I'm really excited to have him on too. I sadly do not know any of his friends, I don't think, but have admired his career progress. And I think the arc of what he has done is something so many people in venture want to understand better, which is namely, he founded a VC-backed company himself, became an angel investor, and then has now gone on to raise institutional capital. And way back when, people became VCs out of banking or more, sort of traditional finance jobs. And now the trend has been to do what Jack's done, but Jack's done it in a particularly, excellent way, if I can quote Bill and Ted. So now on our pods, we are using a burning question to help anchor our guest conversation. And for Jack, it's going to be all around this journey from founder to angel to institutional investor. And as a fellow founder GP, I'm curious, Nick, what comes to mind immediately for you, because you have founded your own firms as well. Slightly different background coming in, but you are also a founder that has made this jump.
I guess I'm uncomfortable with that terminology, and partly because I think if you tell that to a founder, they react with like, yeah, go fuck off.
Wait, which part? Why? Because you're a VC now?
I'm just like a founder too. Like I think the risk profile is so different, obviously. You're not building like a physical or digital product. You're typically managing much fewer people. Like I think the stress levels are, I think, different. Although I'm pretty stressed out a lot, so maybe not. But I think I'm most excited to ask Jack maybe like, yeah, if he actually thinks that's relevant. Like if he thinks that comp is relevant. Like does he actually think of himself as a founder of a firm? What are maybe the similarities or differences? Or if he also would be like, get the hell out of here. Like, this is nothing like founding a company.
Oh, I love the fact, because what I'm hearing from an LP perspective is, so much less stressful investing other people's money than building a company. And unpacking that is really interesting because from an LP perspective, you're investing in a blind pool and you're like, go forth, right? We're just along for the ride in many respects. And it has its different stresses around it, right? And so understanding how one decides to take on external capital and why, and how that may or may not change an angel investor's investing, not just perspective, because I think usually it implies a bigger check, but just sort of the risks that people are willing to take. And do they really change what they're going for? Do you take bigger risks as an angel investor, or do you take bigger risks as an institutional investor? How do you feel about using other people's money? But from an LP, that's sort of the questions that go on in your head. And where does the investing acumen come from? Because I, as an N of one LP, believe it can come from anywhere. So I don't think, no offense, a founder has a lock on being the best investor, or a banker has a lock. If that was true, would see it in the numbers and would all know it. But I think it's fascinating to know what kind of founder wants to become an investor and what are the strengths and the I gotchas in that.
Yeah, and not just doing it because it's like the next career step. and like a Silicon Valley founder's journey. Certainly I know that's not the case for Jack, but also going into it with a sense of, wanting to win in the same way they probably did with building the company.
It did feel like there was a time in the market where it's a little bit like when you went to college, you're like, oh, I'll grow up and become an investment banker, and I'll grow up a little stack, and I'll be an associate, and then a VP, and then an MD. And in Silicon Valley, they felt a little bit like, I'll found my startup, and maybe it was in crypto, maybe it's in AI, and then I'll become a VC, and then I don't know what comes after VC. Lifestyle VC? I'm not sure what the evolution is, but something would have to happen afterwards.
Angel investor?
Angel investor again? I don't know. He's full circle.
Back to angel investor.
Maybe it's his superpower alley. I don't know, but we can chat with him and find out all about it.
Let's do it. Mr. Jack Altman.
Hello.
Thanks for joining us. Appreciate it.
I'm thrilled to be here. It's great to see you.
This is fun. I think I just spoke to you yesterday, 2 days ago.
I think it was yesterday. Yeah.
Okay. Well, good to see you again. Slightly different context. Thanks so much. And congrats. Welcome to new member to the fam.
My mother-in-law is here, who I know you know.
Kathy's in the house. That's what I'm talking about. What's she doing over there?
She's just hanging out. Yeah, there's tons of kids over here. She's just hanging.
Jack's mother-in-law is one of the most amazing, completely insane, wonderful people and moms in the world.
Well, I aspire to be a completely amazing, insane mother-in-law, so I'm very excited to hear that they're out there.
Jack's mother-in-law was my carpool ride driver to school almost every single day in high school. From Brooklyn to Manhattan.
I feel like I've heard that you weren't on time every time.
Are you serious?
I think I heard that.
No, it's the opposite.
What was the deal?
I would show up every single morning directly on time. I hated being late for shit. Jack's wife's sister, who I went to school with, was always late. Always late. And I would stand on the corner waiting for her and her mom. They very kindly would give me a ride to school because it was in Manhattan. And I would go through this insane debate in my head, which is do I just give up and get on the subway and only be a little bit late because I've already waited? Or do I actually wait the distance and then maybe make it up with a drive? And it was
and you were just a kid. That's a tough spot to be in.
It was a really brutal debate that I would have, but they weren't late every morning, but it was often. So hopefully Kathy's listening to this. She'll blame it on Maura though. How are you guys settling in though? New kid at home.
We're great. It's great. 3 kids it's great. It's more, it's definitely more than 2, but it's great.
Can I stay in the dual working parent theme as a dual working parent household ourselves? And my son's a little further along. He's in high school now, so we're starting to look at college, which is its own really weird, mind-bending trip. But I really appreciate how you've talked about having children publicly and what you sort of learned about things like abiding by bedtime and what the implications are and how do you balance being an investor and a parent and just to roll with it. Can we talk a little bit about that? I really appreciate when people share because I don't think it's discussed enough.
I see childhood as this, relatively brief window that as a parent you're going to get, and probably in the fullness of your life, it's going to be 10 years that, when you go back and account for your life, it's, going to be one of the most special periods, or at least that, that's what I hear from people who are, further along the life journey. And so it's not like you can or want to spend every minute, with kids. It's not good for anybody, but I don't know. I sort of just came to the conclusion that it was going to just be, a part of my life that, I say to myself, this is the one thing that's more important than my work is going to be family. And I'm just going to abide by that. And, you still got to make compromises and whatever. But, on the dinners thing, for example, I hate missing bedtime. I'll do it when I have to, but I just really don't like to. And I think there are definitely ways where that kind of thing is a work sacrifice because there are valuable dinners that, are on the margin and you say no to the marginal one because you don't want to miss the marginal bedtime. And there's a trade-off to that. But I think there's so many other ways that you can make up for that. And there's so many compensations and there's so many other ways that time can be wasted or spent more productively. And whatever that was, if you're intentional about it, you can find another way. I think it is so hard to predict exactly how it's all going to shake out. So I just start with my own internal, what kind of life do I want to have? And then, do my best to balance it all.
I don't want to ask the question, any hacks? Because I don't think being a parent, there are hacks. But are there particular things that you find that helped you keep the balance? Because My favorite thing to tell myself is sometimes just getting out the door is an Olympic decathlon event. And it's 8 a.m. and you feel like you already lived 5 hours. But getting out the door is an important part as well as the 5 hours before. And I don't know, any tips for how to balance it that you've found?
No, I'm definitely imbalanced right now. Like I've got work, family, see my friends. That's it. But I'm cool with that. Like right now, like I don't need hobbies and the rest of it. So definitely like the easiest stuff to cut is like the hobbies and like the things that are not relationships or work. Obviously, we all want quality time instead of quantity time. The problem is you don't know when the quality time is coming. So you kind of have to put in enough quantity of time to get access to it. But you can kind of guess certain moments that are going to be more and less likely to lead to that, and then kind of try to set your schedule up around it as best as possible. But no, I don't have any hacks. I'm also only 4.5 years into this. So
they are the very busy years. And it's funny, I asked my son now about some things when he was small, and he's like, I don't remember at all. I'm like, what are you talking about? That was the quality time. I'm like, I was there for that whatever thing that you did in kindergarten. He's like, yeah, no memory. Thanks. What are we doing today?
Even if they don't remember the exact event,
I think it goes in. It
goes in, and it led to the relationship you had with them in kindergarten led to you having a stronger relationship when they were in third grade. And it kind of, I think it probably perpetuates through life. And so there's still value to it, even if the memory is not there, I would think.
100%. And we're going to talk about Alt Capital next. But I also think the ability to have priorities and not just the forced prioritization in the day, I think is a very important skill. I'm going to bridge to investor. I think it's actually very helpful because you find yourself, or at least I find myself always being like, what is the most important thing I need to do today? Because I'm going to cull all the bullshit.
And I think when you have something that is a really high opportunity cost for your time and you sit down, and you're like, what matters to me work-wise? And I can't just say yes to everything because I just don't have enough available hours, or I don't have enough hours I'm willing to spend rather. It forces you to say, are these networking events worth it? Are meeting these companies that are outside my box, but like could be interesting, but I don't know much about them, is that worth it? Is taking this, coffee with somebody who I like, but I don't think that there's going to be much of a professional overlap or whatever, is that going to be worth it? And so you just have to, get into somewhat ruthless trade-offs, but like, it does get back to the Joni Ive quote that always stuck with me is like something along the lines of like, the best idea you say no to is like what true focus is about. How good is the marginal thing you said no to? And that is like a good indicator of like how high quality of focus do you have?
One more question before we go to Alt Capital. I feel like I still struggle to prioritize and then say no to things.
I struggle with it too. I got to the thing that unlocked for me, which I think was a helpful thing from operating, was I got to a place, at least at some point in the Lattice journey when we had, 500 or 600 people, the number of demands on your time becomes such a laughably long list that I just got to a point at some place where I started sending emails like, this is really cool and I'd love to meet with you. I unfortunately just can't prioritize this right now. People were like, I respect that. And now I kind of say that. And, I have, it depends on the setup and all of that. But I think people really respect.
Yeah.
One of the toughest ones is, hey, I'm visiting from New York. I'm going to be in San Francisco these days, 6 weeks from now. Do you want to get together? Of course I'm free 6 weeks from now. Of course I could do it. And so the only way I've found to do that in a way where you're not kind of, not being honest or whatever, is to say, right now I'm focused on X and I need to prioritize that. And I'm around, but I just can't, that's not on my list right now. I'd love to meet you sometime in the future. And I think people respect that because everybody else is juggling their own priority list too.
So let's dig in. Give us the 411 on your recent fund, Alt Capital. The size, what are you investing in? Are you leading deals? What is your favorite check sizes to write? Or maybe you have a range of check sizes. Tell us all about it.
Yeah, so it's $150 million early stage fund. We're generalist. I sort of have taken the view. I've been doing investing in various forms sort of over the last, I guess 12 years in different ways. And I've kind of come to a view that for me, I am basically just founder driven and I'm following the ideas as they come. And so I more or less believe that the fewer constraints, the better within reasonable bounds. Obviously, zones of complete incompetence you should stay away from, and strategies that make absolutely no sense for your fund size you should stay away from. But I believe in fewer limitations rather than more, because I think it's so rare to stumble on something that you have high conviction on, where you feel like you're in the presence of greatness. And I want as many degrees of freedom as possible to be part of that whenever I'm lucky enough to see it.
Does that mean you invest, one could expect a range of check sizes? And in generalists, like what's out of scope?
I would say nothing is formally out of scope, in the sense that even though I'm not a particularly good or educated consumer investor, and I have not made many consumer investments, if somebody I had an amazing relationship with and thought the world of was starting a consumer company, I'd want to back that person. So that's the caveat. But like there are areas where I'm just going to know way less about it, and my network is just going to be way less dense there. So I'm much less likely to do it. But I don't want to have any idea formally out of scope, because I do just believe that all of the important companies, tend to be these N of one, very new things, and it's just such a limited set. Most of the investing that I've done historically, by most I mean probably 2/3 or something like that, has been B2B software generally. So that's probably the highest density, just given my background. But I think there's lots of amazing stuff to do in other categories, and there's lots of things that are really hard about B2B software. And then check size, it can be co-lead or lead checks is mostly what I'm focused on. And the check size will be mostly in the 1 to 5 million range, although obviously there'll be exceptions on both ends.
And in today's market, is that a seed check?
It can be like participating in an A. And then, obviously, with a $150 million fund, can't lead a bunch of A's. But my hope is that there's enough things over time that we find enough conviction in that like I feel like we should be so lucky to find stuff that we want to write bigger checks into and are able to.
Those reputation is built over very long periods of time. Obviously lost very quickly, as we know, but built over very long periods of time. And you have I think I'm allowed to say this because I think it's true. Like, you have a stellar reputation in startups, venture. I don't know if I've ever heard something negative about you, Jack. Why do you think that is? How did you build that? What does it mean to be like a genuinely good guy in the venture business? Curious on how you think about that.
Very nice of you. I'll own part of it, which is that I think I do, hold myself to a standard at least of never lie, never do wrong, even in sticky situations, try to, get it all on the table and like figure out how to treat everybody in the most fair way that you possibly can. I think those inevitable sticky situations are actually where like integrity is shown. So many components to a reputation, but at least on the being a good person side, that's nice, and I'll accept that part of it at least, because I do hold myself to a standard of always operate, a way that I would be proud to print. And I'm sure I've messed up on stuff, but I try for that. I think like some of this too is, the more involved you get in the more interesting situations, the more chances you get to have, hurt feelings, to have somebody get screwed in a situation, for there to be winners and losers. And, the further, you go in sort of just career, the more chances you have to be the one holding cards in those situations and making calls in those places. And I think like, that's when you get your chance to operate different ways. I talk about this with some of my friends about, there's like short and long-term approaches to things. And I do think that being like a good person in sort of the colloquial sense has business cost in certain cases, where that you could do something playing inside the rules and not doing anything that's formally wrong and get a better outcome for yourself. I think we could probably name a lot of people we respect a lot who would err inside the bounds of moral and legal rules, even doing things that are very self-interested, and that leads to good outcomes for them. And so, I don't think that it's like a freebie exactly to do that. And, everything's a spectrum and there's a balance to it all. But to me also, even on those things, I'm like, I would rather make a little less money or be a little less successful, but do things the way I want to do them. And then, hopefully over time that also happens to pay off. But even if it doesn't, it's just a choice about how do you want to show up in a world that has a lot of people that are, cutthroat and sharp-elbowed. And I think it's a choice to play the game like that or not.
Speaking of style, you have this great track record of investing in big names like Figma, Rippling, Flexport, Opendoor, and yet you're very discreet about it. Is that part of your style as an investor, or is that just an LP perspective that's maybe I'm just not reading the right things?
I think there are investors who contribute a lot to companies. I think more often than not, investors contribute a small or medium amount to companies. And I think it's just, for me, just having done, put 9 years into a company, I find it a little grating when investors are like thumping their chest and taking a lot of credit for some founders and all their employees pouring their lives into some like really hard companies. It just doesn't sit well with me. It's just not for me.
You founded a gigantic company. So I think you have a certain level of credibility in the ecosystem, et cetera. I haven't. On the one hand, like I see a lot of my peers sort of like beating their chests, and on Twitter, threads, whatever, taking credit for stuff. And I'm like, do I need to be doing that? Like, is the ecosystem so noisy now where like you just need, I don't know if you maybe feel this pressure. Is the ecosystem's a lot noisier now than it was 10 years ago in venture? Like, do you need to shout from the rooftops?
It's funny because like even as you're saying that, I'm like, you have a reputation among founders, investors, LPs of being a great investor. And I don't think you're loud about it, but it's like in circles who know about you and your work, it's a well understood thing. And to me, I think the high signal to noise ratio that quiet but carry a big stick type of approach to things gets you, I think is going to beat, versions of sort of loud and noisy and whatever. But,
I'm always thinking about the next founder though. The next founder. You know what I mean? It's like
totally.
Past is whatever. And I'm like, what's the next founder, next investment, next thing? And how do I make sure that they know that? You know what I mean?
Yeah. And I think that does matter. And I think there's multiple ways to do it. Some people get there through tons of marketing and events and just a massive top of funnel.
Yeah.
Some people do it through, curated referrals, and they just are finding that one off market, non-consensus company through, really high quality people who are like, no, the kind of person I want to work with is somebody like Nick, who's really done it in a quiet way versus somebody who's flat. So I think there are a lot of ways to do it, but I think what you're getting at is true, that there does need to be enough presence to have a chance to see the stuff that's going to matter for sure.
I know you have a joke about this, but I'm going to ask anyway. Something along the lines of like, it takes typically less than 30 seconds to 60 seconds. I'll let you tell a joke for someone to ask you about your brother.
Oh, there was a joke at Lattice in the, I think this was like our series, by our series B, which was in 2019, beginning of 2019. There had been 3 funding announcements. There had been a seed A and now B. And all of them had like, Jack Altman, Sam's brothers, HR company, blah, blah, blah. There was a joke at Lattice, which was like, because we were feeling kind of, good about ourselves by this point. We were like, we got to, there was a joke that was like, even if Lattice IPOs, it's going to be Sam Altman's brother's company goes public.
Oh, no.
Will be the headline. Yeah.
So do you feel like at this point, like you built $1 billion plus company? I think you said you had 500 people. You've started your own venture firm, Alt Capital. Like, do you still feel like that's the case?
I mean, like objectively, like he's had a ridiculous career and accomplished unbelievable things. And so I think there's a sense in which that comparison is always easy and there, and like I could probably accomplish a lot more than I have, and the thing would still be there. And I think that's why I don't feel bad about it, is because I'm like, okay, I can think of people who have accomplished something that is 5 times or 10 times bigger than what I've done, and they would still get the same comparison if they were his brother. So I'm like, you know what? I respect that person who's done 5 times more than me independently. They would still get the same thing. It's all fine. And I think there was a point in my career where it was like a chip on my shoulder driver for me where I was like, oh, I have to like I think part of why I wanted to start a company even, because I was 26 when I started Lattice, and even then, he had done YC. And I think looking back, that was one of the chips on my shoulder, was like, I got to prove myself too. I got this, 4-year-old older brother who's done all this stuff, even, at that point in time. And I was like, I got to prove myself. I don't think I feel that way at this point. And maybe also some of it's just being old. I'm a different 35. I've got kids. It's just there's just like a lot that's different. And at this point, I'm just like proud of what he's done and of what he accomplishes. But I think it probably was like a driver for me when I was younger.
And the sort of burning question that we wanted to unpack with you was your journey from founder to angel investor. And maybe those were simultaneous. I don't know. You can tell us. And then now institutional investor. This is the arc that I think so many people think is how one goes to become an institutional investor and really want to follow in your footsteps. So we're really excited to talk to you about this. And can we start with the beginning and talk about the founder to angel investor jump?
No, I started Lattice in 2015, and I probably didn't start angel investing really until like 2018, 19. I had done investing before actually, but then the beginning years of Lattice were just so intense that I put it away entirely. And then I picked it back up maybe 4 years in or something like that. But yeah, from 2015 to 2019, it was just, starting a company is just it just is so engrossing and it's so demanding that I just didn't have space for anything in life, much less, angel investing. But I didn't even have space for looking back, this isn't something I'm proud of, but I didn't have space for exercising. I didn't have space for friends. My now wife, we were long distance for a couple years at the beginning there. So I wasn't, I was neither dating nor spending a lot of time with her. So there was a lot of focus on the company, and that is what it took. And we were in this incredibly competitive space that just was an execution knife fight really for years there. And so it really required that of me, I think, to get going. Once we got to our first full exec team, about 100 people, a different sort of competitive dynamic in the market and some brand, I was able to breathe again. And I think, I just naturally became interested in investing in companies. And the way it started for me was, I guess there were two ways. One was just other founders that I was meeting as peer founders or earlier YC companies, or just other companies around Series A and B like us that were sort of in the peer set. And then also vendors that we use. That was a huge, way to find stuff, was just hey, we're using this startup and it just solved this huge problem. What is that? And then, the founders come in and pitch you, those pitching you to sell the product to you. And you're these founders are incredible. And so that was kind of how the angel investing thing got going. And I just really liked it.
You're running Lattice. You're starting to make angel investments again. How did you manage the time? Were you taking founder pitches? How many investments were you making a year? Or it really was we spent a half an hour. I've tried the product at Lattice. I like the thing. I'm going to write a small angel check and that'll be that.
It was kind of like that. And I don't think that's a bad thing, but it was a very low percentage of time compared to the way I approach a single company now. And I don't actually know if that leads to better or worse investing, but it was much more hey, I just already know and like your product. I've already met and like this founder. And then it's hey, by the way, are you, if you're raising a round, I'd love to participate or whatever. It's just such a different thing where I would never reach out to a company cold. I was never doing deep diligence. I would never meet a company and then call their other customers. There was so much less work done on any given angel investment decision.
You're in the mix in San Francisco, Silicon Valley. You have lots of founder friends. You have VC buddies. Were you doing investments via them as an angel?
100%. And that's one of the best ways as an angel is a professional investor is hey, I'm leading this round. We're looking for 5 to 10 angels, of companies a click later or whatever. Would love to connect you to the founder. And it's just an insanely good layup. I think a lot of angels can have really good track records because by the time they're even thinking about doing it seriously, the signal's already so high, either because of the lead in the setup, and there's no adverse selection from that setup, or they know the product, they have like a real inside scoop on this thing is great or whatever. So I think it actually leads to really, high quality portfolios for a lot of angels. So I think it's a really good thing to do. And I guess on the other point that you asked about, like, is it a trade-off to your core work? I think where I've netted out on this is in a world where you had complete control over yourself and complete discipline, I would say, yes, it is a trade-off. Like, I think having a hobby that's not your company, if you're not constituted like a regular human, having any hobby other than your company is the negative, because like it's better to be an angel investor as a founder than it is to, play video games or something, probably. Like, you learn about other businesses, you see what traits other founders have, and maybe you can learn from that. You see how funding rounds play out. Like, you pick things up. So it's better than nothing, but it's not as good as, focused. You could spend that hour in a more focused way to move the company forward. For me, though, part of my longevity with Lattice, I think, was actually having other interests that I was able to the ability to scratch other interest itches was a big part of what helped me stay, focused on the company for a while. And I think that for different people, this all works differently, but I think for my own psychology, it was a net benefit for that reason too.
Can you guesstimate, round numbers, how many angel investments you think you made before you decided to institutionalize? Just to give people a sense of, we see people, just as a hypothetical, that have done, 2 years worth of angel investing. Maybe it's a dozen-ish companies. I have a feeling you had more.
Oh, I had more. I don't know the exact number, but 70, 80, I don't know exactly. Some number like that, though. More than a couple dozen.
How did one get to the point where you felt comfortable and or interested in becoming a full-time investor? Because it's very different from running a company.
Very different.
You can explain it better than I can, but from the outside, it looks like...
It's so different. Now that I'm doing this full-time for 6 months, I'm like, this is really different. Like, there is overlap, and there are like, I've tried to I actually tried to write out a Venn diagram of what's the same and what's different, rather than just being like, oh, it's, kind of similar, kind of different. But like, there are a lot of things in common, but there's so much that has essentially nothing to do with each other and are even opposite of each other. An example of one that's completely opposite is I believe the faster you can make decisions as a founder, the better. And I actually think it's better if you could double your rate of decision making and reduce your quality by a little bit, as long as you know a one-way door versus a two-way door when you see it. I think you're way better off. Versus as an investor, like, that's a horrible orientation. You want to be making fewer, better decisions. And those are just completely different ways to work. And it's a different mindset. And it's like it's a different everything. And I think those orientations and what goes into being good at each of those orientations is just like quite different.
Well, given the fundraising environment is definitely a different one now than it was a handful of years ago, and you've come through it very successfully. So you picked a time when the market was not trending in the favor of newer managers, right, to raise. Curious how you found that experience and how you decided to take on institutional capital, because as much as I love being an LP and support the LP world, it's not without its own responsibilities. Like, there's fun things like audits, and things that one has to do when you manage other people's money that you don't have to do when you're investing your own. So if you can unpack a little bit your experience and how you went about fundraising and what you thought of it, would be great.
Yeah. Well, I think the first thing I always think about with any, story that you're going to pitch, and I, up until now, had always thought about fundraising in the context of a company. Obviously, this time it's in the context of a fund. But I was like, before you're trying to convince anybody else of anything, you got to first convince yourself of something, and you have to really get all the way grounded in that thing before you try to go explain it to anybody. I had like a very valuable sort of exec coach that I worked with for a long time at Lattice, and so I was able to do a lot of that work sort of in private. And I had enough of my own experience with what kind of VCs I liked having at Lattice and which ones I was impressed by and how I found their approaches. I had my own sort of views on kind of where I felt like the market was going at the moment, which, is probably no more right than the next person's guess, but I had my own guesses and still do. And I basically got to some combination of what's the strategy that I actually think can win durably, what that I'm able to execute, and that is fun for me, sort of some like combo of those three circles. And I just got to, and I think there's many ways to do well in venture, and we could easily rattle off 10 different firms that have succeeded with completely different looking strategies. And, it all just comes down to like, can you work with the best companies or not? And in some form or another. I basically just started there of like, what do I actually believe? What do I want to do? And what do I think I'm capable of? And then I got really clear in that. And then I went out and I sort of ran a fundraising process that looked just like my fundraising processes that I always did at Lattice, honestly. It was like the literal same playbook.
And it worked the same way.
Yeah. I mean, directionally.
Is your playbook a rifle shot or more shotgun, right? Some people fundraise because they do a lot of homework and sort of know their targets in advance, and you don't have to take the 600 meetings, whereas other folks, maybe less so in company fundraising, but you certainly hear about it in the seed early stage funds where you actually talk to a really wide range to narrow down who are going to be the right LPs. Out of curiosity, what's your playbook?
For me, both at Lattice and then with this fund, I'm like pretty relationship driven the way I like to approach it. And I'm, I think these relationships, definitely as a founder with your VCs, but I think it's the same as a GP with LPs. I think these are like, if they go in the bull case, these are long relationships. They might be 20-year relationships. And so I took, both at Lattice and at Alt, I took much more of a sort of targeted approach that was referral driven, where I really checked reputations of firms and how did people that I knew who had worked with them feel about them. Like that was where I always started. And I didn't talk to a zillion, but I sort of had like a idea in my mind of the kind of partners that I would want. I think by the time I talked to them, I was pretty grounded in this is what I want to do. And here's, there's plans A, B, and C with how this could play out. But like, here's kind of how I see it. And this is why I think I have a chance. And so I was able to, I think, explain my approach in a way that I was convinced by, which I think makes it easier to convince other people.
Something I've heard people say, and I'm curious if you experience any of this, but sometimes I've heard angel investors say that they feel more comfortable taking bigger risks because it's their own capital versus investing somebody else's. And I've heard people say the flip side of that. And so I just was curious, given you've been on both sides.
I'm a flip side.
So
actually,
Nick's a flip side.
I'll let.
Yeah, so Nick's a flip side. But I was just sort of curious, given you've been on both sides, how's it feeling? Or maybe the less putting you in a tight box would be like, what are the different risks you feel like you can take now with this fund versus as an angel?
I don't know if I'm more or less risk tolerant. I think maybe similar, but I think one difference, which doesn't necessarily play out well or negatively, is when investing my own money, I made investments where I was like, I don't know that I think this is going to particularly do well. I just want to be around this person or this company for some random reason. And sometimes those actually do go well and you just didn't see it go. You didn't think it would and it did. And like I've made angel investments like that. And I don't think I would do that now. Like I don't think I would put somebody else's money into a company that I didn't think would do well, but that I wanted to be part of. Like that seems selfish and I don't think I would do that. So that's a difference.
I don't know. I've always used this like poker analogy. I have this friend who's like a professional poker player. And he's like, I play my best poker when I think of the chips on the table just as plastic chips. Like if I start thinking about it as actual dollars, then I think about like, oh, this hand is like, I don't know, there's like $30,000. It's like, if it's just chips, I actually play an optimal game.
Scared money don't make money or something like that.
Oh, I like that.
I'm managing obviously other people's money, which I take very seriously. But if I start to think about it in dollar terms rather than as just chips on a table, I'm actually not going to be taking the appropriate level of risk.
I also think that like it's so easy to misunderstand risk. And there's so many companies that feel not risky because it's it's got recurring revenue and it's already got a revenue base and whatever else. And you're like, oh, this isn't that risky. There's downside protection. But my experience with those is that downside's not always as protected as you think. And things that you think are stable are not necessarily stable. I think it is so easy to misunderstand risk. And the better heuristic for me is to just not think too much in terms of the shape, but just be like, this is why I come back to the founders where I'm just like, I've never gone wrong when I just back people that just seem like they can't be stopped, and convincing yourself into a situation because you think it's got the right risk profile or the secular trends are behind it. Or for me, I think there's people who are able to do that. I've just found for me that is not a recipe that works as well.
And one last question to wrap it up. What does winning look like for you today then?
I mean, there's a personal life answer and then there's like a, professional answer. I guess professionally, what I'm hoping to achieve would be that we matter to founders and like help important companies exist more fully than they would have otherwise, that we have the ability to play the game for a long time. And, that requires like doing a good job now, but that we can kind of play an infinite game rather than a finite game. And that, I guess, like, I was always oriented this way with Lattice too. Like, I hope that it's a place where, my teammates who I work with, also current and future ones, can build something that's meaningful and substantial for them too.
Jack, thank you so much for doing this. This was really fun, and we're so grateful for you taking the time and not sending us this isn't a priority email.
This was great. This was a much more sort of like personal conversation than I usually get to do, and I really enjoyed it.
Well, thank you.
Thank you, sir. Thanks for listening to Origins, the show where we discuss the venture ecosystem through the lens of myself, GP, and Beezer LP.
Be sure to tune in next time for a bonus mini-sode where Nick and I dig in on his new fund, Asylum Ventures.
You can find that right here in this feed. And while you're there, please rate and review the podcast. It's super helpful for other folks looking for venture insights to find our show.
Origins is produced by OpenLP, a resource from Sapphire Partners for the venture ecosystem to stay on top of the latest VC insights, and done in partnership with Pod People. Please also subscribe to the OpenLP newsletter for a monthly roundup of GP and LP thought leadership, including the newest Origins episodes delivered straight to your inbox. We'll put the link in the speaker notes. I am Beezer Clarkson.
And I'm Nick Chirls, and we'll be back soon. Thanks for listening.